Hello and welcome to the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on GoGold Resources. And really, this is an introduction to the company. GoGold Resources is traded on the TSX under the ticker GGD and on the OTCQX under the ticker GLGDF. And I'm joined today with the president and CEO of GoGold Resources, Brad Langille. And Brad, it's great to get you on the show. We've talked a lot at prior conferences. I've been a shareholder of this company for years. I've been following the successful milestones with the company, and I'm excited that we're finally getting you on the KE report to introduce GoGold to our audience. Now, just for people listening in, the company is operating a production asset. It's a tailings asset, Paral, which we'll get into, but they also have two large development projects at their Los Ricos property, Los Ricos North and Los Ricos South. Los Ricos South is first up in the batting order, awaiting permits, and we'll dig into the metrics there at that project. It's shovel ready and it's very near a construction decision, really just waiting on the permit. And then Los Ricos North, you have some flexibility there on how to develop it. So let's dig in and get under the hood of GoGold Resources. Brad, I guess just kicking off, let's start off with the cash flow generation and the asset that is Paral, which is really a tailings project that you're reprocessing. So you're cleaning up the area as well as making money.
Yes, Shad, thanks for the opportunity to talk to your listeners this morning. And yes, Parral, the company's been around a little over 13 years now, but incredibly, Parral in June will be 11 years of continuous operation there. And it's a unique project in that we're taking these 300-year-old tailings that sit in the middle of a city of 130,000 people. We're transporting them out of the city and we're putting them in a 21st century environmental state. So the same as you'd have in Canada and the US. And so we're cleaning up the environment, great social license with that city. In fact, just 4 years ago, first time in their history, they awarded the company the keys to the city. So creating jobs and a lot of other kind of social benefits and spin-off from cleaning up these old tailings. And, they're making us free cash flow about $1.5 million, $2 million US a month as well. And really, they're paying for all the G&A in the company, and they're paying for some exploration work that I'll get into a little bit later, and really funding everything right now while we're waiting to get our permit to do our build at Los Ricos, which is, really the flagship of the company. Los Ricos is really what's going to drive us to, kind of the next level as we expand on our production today, tailings reprocessing. But you can't understate the social license it gives us, and it really helps us to get that permit at our development asset.
Yeah, well stated, Brad, especially in Mexico in the current environment and sentiment where it's shifting in a more positive direction with the new administration, with Claudia Sheinbaum in there and a little bit more favorable towards mining. You guys have been good social stewards for a long time cleaning up that tailings, but it gives you a nice revenue source, like you say, that funds the G&A and funds the exploration for the company. One other thing that I think is worth pointing out is you've just recently put in a zinc circuit, and that has helped on recoveries. That's helped on the production. That's going to obviously float into better revenues. Talk to us about the zinc circuit that you put in place.
Yeah, we built that last year with a capital cost of about $3.5 million US. We had what's called a SART circuit there already, which was extracting copper, and we just added the zinc portion to that extraction circuit. So, we do get a sellable copper product and we get a sellable zinc product, but more importantly, it regenerates cyanide that we can use again in our closed circuit leach cycle. So that cyanide, that's the biggest cost consumable in this operation. So if you can regenerate cyanide and use it over, that saves you a lot of money. So that was the main purpose of that zinc circuit. But we do sell the copper and sell the zinc, and that pays for all the operation of the circuit. But $3.5 million, and right now we're making $1.5 million to $2 million a month. So we paid back that capital real quick. The other thing it did, when you start taking the zinc out of that solution, and again, this is a very environmentally friendly process. It's all a closed circuit. That solution just goes around and around and around, is never discharged out into the environment. So when you take the zinc out of it, it actually works better. It leaches better. So we've seen the amount of gold and silver that we can leach out since the zinc circuit was added increase a lot. And importantly, the speed that we can leach it out, our kinetics in the heap, the speed that we can extract the metal went from taking about 1.2 years to down to now it's about 4 to 5 months. So real big benefit with that small capital investment.
Yeah, I just thought it was worth highlighting because it's a step change there at the Parral project, and that is in the Chihuahua state of Mexico. Now we're going to float down to Jalisco state, where you have the Los Ricos project, north and south. We're going to start with south because that's really the next key catalyst. Like you say, it's the flagship project of the company, and you've done a lot of work here over the years to build up resources, de-risk it. You've got economic studies out. I guess let's start off with the resources at Los Ricos South and why this is such a key project for the company.
Yeah, Los Ricos South has about 120 million ounces of resources, and really those resources are very well drilled. And we have two economic studies. We started with an early stage study of preliminary economic assessment, but we've recently, and we published that in February, we took it all the way to final feasibility study. So when you get to a final feasibility study, then you're talking reserves. So our total proven and probable would be about a little over 90 million silver equivalent ounces in Los Ricos South. And that study is a very, very detailed study. It tells you about what your operating costs will be per ton, and it talks about your total capital. It's about $227 million build. And it generates over its mine life, the underground mine life is 12 years. It generates NPV, discounted NPV after tax of about $358 million. Now that's at $2,300 gold and silver at $26. In that study that's published and you can find on CDAR, there's also a sensitivity consideration and sensitivity to commodity price. And of course, the commodity price, about 50% of it's gold. So we've really been getting a big benefit in economics from the recent increase in gold. Because in Los Ricos South, if you applied spot gold price and spot silver price, you'd be up over $600 million on NPV. It's a very recent study, so we haven't seen any real changes in what we estimate for capital and OPEX. The real change has been commodity prices just taking off. Now, Los Ricos North, also we have a study up there, and we have 161 million ounces of silver equivalent resources up there. And that's in an earlier stage study. That's a PEA. But that was done a couple of years ago, and the gold price used was $1,850, which seems pretty low right now. And the silver price was $23. Again, a relatively low price compared to spot. And if you applied spot, and maybe you'd have to bring up the cost a bit because the study's a couple of years old, but you'd be in around about $800 million NPV. So, the district in total, looking at the sensitivity of commodity prices, we're probably up around, the 1.2 to 1.5 billion NPV. And, the company today, we are trading about 450 million market cap in US dollars. So, yeah, they're great projects. They're big resources, significant reserve, and you increase the value of the company by a multiple to your net asset value or your NPVs, and that multiple will increase as you get closer and closer to commercial production. But I mean, the other way we increase the value is if you can increase the NPV, and commodity prices helping us there. And we're going to do some exploration as well. And that can be a real driver in increasing the NPV as well.
Well, Brad, let's dig into a little bit of that now, and let's isolate it for now just to Los Ricos South. In the feasibility study, I think it's also worth noting that, you have a 15-year mine life here producing 80 million payable silver equivalent ounces, as you stated. A big chunk of that's in silver, but a big chunk of that's also in gold. You also have some copper in there. But the ability to find more silver, gold, copper at this particular asset is what also fascinates me, because you found basically a mine. Let's just say that when you get the permits, you got about a 2-year mine build. You could be into production by 2027. It's going to significantly augment what you're getting from Parral. But you could also find mine number 2 underneath Los Ricos South based on some preliminary exploration work and some of the old models you have from historics working. Just in a general sense, Brad, on a high level, walk us through why you could have actually a second mine down underneath Los Ricos South that could extend mine life and really make this project world class.
Yeah, no, that's a very good point. I'll tell you one of the great things that has helped us as we've developed Los Ricos South is that we were able to find just a treasure trove of old data. And that mine operated from 1908 to 1929. It's an interesting story how we came about that, because when we arrived there in March 2019, there was not much data. And Dave Duncan, our manager of exploration, and Jose Carlos Flores, who's our modeler, they really dug into the history. And they were lucky, and they found up in Missoula, Montana, this old archive. And it was related to the president of the company for 22 years, the company called Cinco Minas, which is our Los Ricos today, that they found this old archive. And that guy was an ambassador for the US at the time. So in his archive, we found these boxes and boxes of old data. And that led our drilling. But part of that old data told us that in 1927, they had found a second horizon in the mine, a very high-grade productive horizon, close to surface. And then there was a gap for about 200 meters. And then they found a second horizon, 1927. It's very high grade. So they just got into that. They were mining it. And then the end of 1929, started 1930, because of political conflict in Mexico, revolution, all the foreigners left. But they had found that for us. So what we've been doing is we've been doing some real discovery drilling down in that second horizon. And we feel that probably a pretty good chance of hitting more of what they were mining. Because again, they didn't leave because they weren't finding it. They left because they had to leave. So that's part of the exploration. The other part is just to the south of where our reserves are. And I talked just to the south, I'm talking within 100 meters. There's a fault. And that fault moved that very high grade structure that they were mining on. They looked for it. They were driving tunnels. They didn't do any drilling back then, but they were driving tunnels looking for it. And unfortunately for them, but fortunately for us, we've been doing some drilling down there south of that fault. And recently we found the missing structure. There was about 500 meters of this wide quartz vein. And when I say wide, I'm talking 15, 30 meters that they were desperately trying to find, but they didn't find it. They missed it by about 30 meters. If they had gone in one of their tunnels another 30 meters, they would have found it. So we found it. Now, we don't have the assays yet on any of the drilling we've done there. And at first, we're only drilling with one drill rig until we get on to something that is, potentially economically interesting. But I think there's a high probability we will. And that's very exciting. On one side of the fault where they were mining, we drilled one of the furthest holes going to the south before we hit that fault, about 21 meters of 2 kilo silver equivalent. And then it's faulted off. So now we're looking to see if we can find more of that on the missing piece that we have just found the missing piece. So stay tuned there. But in general, all that exploration, right beside, right underneath our 90 million ounces of proven probable reserves, where we're going to be spending 227 million on infrastructure and a mill to produce on average about 7 million ounces of silver equivalent in the at least in the first 7 years. That could really, really potentially increase the value of Los Ricos South a lot.
Yeah, I think that's the key takeaway, is that all of the sunk cost will already be in place. You'll already be mining. So if you can find a whole other resource down there, a whole other deposit, it's like finding a whole other mine, but not having to build it. So that's the trade-off here, is that you're able to capitalize on the sunk cost you'll already have at Los Ricos South and then just keep building upon it. So this could very well just keep going for many, many years in the future when we are no longer on the planet. But let's also now pivot over to how the production profile will increase, not just with Los Ricos South over the next couple of years and continuing after that, but then the plan later to bring Los Ricos North into the fold. What does that do for the production profile, not just through the end of this decade, but kind of looking forward to the next one?
Yeah. And just back up for a second. One great thing about where we sit with GoGold today is that we have a very, very strong balance sheet and we have cash flow from Paral. So today we're at about 135 million US cash in the bank, no debt, and generating free cash flow from Paral, $1.5 million to $2 million per month. So $4 to $6 million a quarter. So it makes it possible for us to build Los Ricos South, and the same time that we're constructing Los Ricos South, and it's about a 24-month build, and then about 6 more months to ramp up to full commercial production. But while we're doing that, we can be advancing Los Ricos North with some more drilling to tighten up the resources and advance it to a final feasibility study and apply for a permit. In an ideal world, and what we're shooting for here is to have hit full commercial production in Los Ricos South, which would be a little over 7 million ounces a year, plus the production we have at Paral, so about 9 million ounces, and then have the North ready to build. And the North would actually, the way it's planned today, would actually be a bit more than that. It'd be closer to about 8.5 million ounces. So really, we're looking at in-house pipeline of growth over, call it the next 5 years, of going from where we are today at 2 million ounces a year, Los Ricos South coming into production, hitting full commercial production in 30 months after breaking ground. So that brings us to over 9 million silver equivalent ounces. And then Los Ricos North, the potential to bring us to 15 to 17 million ounces of silver equivalent production. And the Los Ricos district, all of it, is projected to deliver those ounces at right around $12 all-in sustaining costs. So we would be a low-cost, very significant, in fact, larger mid-tier producer over that kind of 5-year horizon.
Yeah, Brad, I think that's what's so exciting about the GoGold value proposition. We like to focus on growth-oriented production, and you've got growth at just the zinc circuit in Paral is helping you grow, but you got growth at Los Ricos South first in the queue, then Los Ricos North second in the queue, and then the expansion potential at both as just another blue sky upside. So you can see the pathway to real production growth over the next 5 to 10 years. That's really a game changer at a time where metals prices are really rocking. While we're talking about the financial strength of the company, though, I think this would be a good moment to just talk about who some of your key institutional holders are, just a little bit about the share structure and the financial health of the company. Anything you want to add in there, Brad?
Yeah, we're about 50% institutionally held. If you look at our shareholders that report, the institutions that report, you'd have VanEck would be the largest, but we have the likes of Sprott and Precious Metals Fund, Franklin, just to name a few, Oda Europe, Ixos, Earth Resources, and also myself as a reporting shareholder, I'd be right behind VanEck. I'd be about second largest reporting shareholder. So yeah, a very strong balance sheet. And, you know, with all that money in the bank, and you know, we're obviously going to do a debt portion here to fill out that $227 million of capital. We currently have about 8 term sheets, and we're whittling that down to the best term sheet. Not just cost of capital, of course, that's one of the big considerations, but flexibility of capital. And now that we have 135 million US in the bank, obviously the terms on those term sheets are even getting better. They were good before, but they're even getting a bit better. And we'll have the flexibility. And as you mentioned, Shad, to be a growth story all the way through. You know, we're going to be breaking ground here once we have that permit in hand. And that's exciting. And that's a big, big catalyst the day that permit's issued. And then, you know, it's breaking ground, first pour, commercial production. But we're more than just that. We're all of that build and all those good catalysts, and we're Los Ricos North getting ready to be built next. And we're finding more ounces right around the deposit in Los Ricos South. The excitement of discovery at the same time we're building. And you nailed it. We want GoGold is a growth story. It's a producer that's getting much bigger, but it is also growth through exploration and our pipeline of projects.
Well, I think that's a great summary, Brad, and that's where we'll wrap it up for today. This was a great introduction to GoGold Resources. And yeah, I think it's an exciting growth story in both the silver and gold space simultaneously, with a few kickers from zinc and copper in there as well. You can see the pathway to production. I will include a graphic underneath this interview for people listening in where you can see the projected growth profile through the end of next decade. There's a lot of catalyst on tap. Obviously, the big one right around the corner is the permitting for Los Ricos South. So keep our fingers crossed there, Brad, that you get that in the next couple months. And I know it's something that you feel is going to happen imminently. For those listening into this call, though, if you want to follow along with the news flow, definitely click on the link in the show notes. It'll take you right over to the GoGold website, straight to their news section, where you can either sign up for updates right to your inbox or just follow along. When that permit news drops, it's going to be a big catalyst for the company because then it's go time. It's a 2-year build, 6 months of ramp up, and then Los Ricos South is throwing off revenues and cash flow. So exciting time for the company, exciting time to have you guys on. Let's get you on a little more regularly after this and follow along with some of the key catalysts. And as always, looking forward to our next conversation.
Great. Thank you.